financial ecosystems, such as e-commerce players, traditional retailers, fintechs, and any platform that wishes to embed financial services in their operations. Partners can enjoy the perks of becoming a bank without the hassle of obtaining a banking license or building a banking infrastructure from scratch. Across the world, future partners can leverage Standard Chartered's banking licenses and expertise to offer financial services at scale. Here's what partners can build with us. With Standard Chartered Nexus, they can develop a competitive edge, build scalable businesses, and create customer stickiness. This is how it works. We provide the banking framework that streamlines core banking capabilities into an elastic system of engagement. We work closely with our partners and regulators to create tailored financial products with our hyperscale and hyper-converged technology stack for a truly plug-and-play banking experience. Our partners build their use cases to offer their end consumers a unique banking proposition. Together, we create hyper-contextualized banking products supported with cybersecurity and fraud risk management capabilities. From improving financial inclusion to innovative disruption, let's shape the future of banking together.
Hi everybody, I am Dorel Blitz, VP Strategy and Business Development at Personalitics. Personalitics is a global category leader in financial data-driven personalization and customer engagement for financial services. We are a global company with over 280 employees, providing for over 70 banks in 30 markets a white label personalized engagement platform. We're helping banks to leverage their biggest asset, which is their own customers' financial transactional data, in order to quickly drive a significant business impact and market differentiation. We're helping banks to move from a passive transactional relationship into a much more smart, proactive, financial data-driven engagement, and by doing so, to better sell and to better service their own customers. And for the customers, we're helping them to better manage their financial life and to stay on top of their finance, and by increasing financial wellness and resilience. Our vision is around self-driving finance. We're helping banks to fulfill this social contract and proactively act even on behalf of their customers, helping them to achieve their own financial goals and to monetize the relationship value. We are looking at the financial transactional trajectory by helping banks to accessing financial transactional data, to better categorize and reach the data in real time and understand customers' financial behavior, to quickly deploy real-time, proactive, personalized insights, alerts, recommendations in different channels, and helping customers to understand their financial life and their financial behavior, and even integrating with the product catalog of the banks by providing real-time financial data-driven product-based advice for the customers, and even a set of automated self-adjustable financial wellness programs. So this is a complete platform that is dealing with accessing data, deeply understanding in real time customers' financial behavior, including predictive analytical models and cash flow, providing a rich catalog out of the box with insights, alerts, recommendations, and codeless creation and management tools, a set of automation programs, and integration with different systems within the bank and outside with open banking and open finance. And the ability to really move the whole experience into a smart, proactive, financial data-driven that increasing engagements and trust and the receptiveness of customers to receive a product-based advice. We are proud in our ability to quickly drive a significant business impact across different segments within our customers' clients, and you can see here some of the great numbers. Thank you, and you can see here the great proposition of Personalitics across the banks and across our segments. Thank you for listening to us.
Hello and welcome to the SC Ventures podcast session. My name is Simran and I'm joined in the studio with my colleague Harold.
Hey Simran, how are you?
Good.
Okay, great. Well, so for today's session, as you know, this is the 4th day of the Singapore FinTech Festival. And we've had sessions on a number of really interesting topics, from quantum computing to tokenization, DeFi. And today's session is actually about embedded finance. And we're joined by 3 experts. for today's session. Before we go into actually introducing our guest, I wanted to give you a little bit of perspective on embedded finance. I was actually reading a report last week that in terms of growth, the projected revenue of embedded finance would be around $230 billion. So you can see, the importance of this new sector. And it's actually growing from 2020, which was at about $22 billion. So it just, really shows you the importance that embedded finance is going to have over the years. I think you can agree that these statistics show quite an exponential growth. But do you know what embedded finance covers?
Yeah, it covers a wide range of things, and I think when we were talking about it earlier, it's not about just the coverage, but the impact it's having on the marketplace and the ecosystem. And we've got three great speakers today to talk us through these. Do you want to introduce?
Yeah, let me introduce our very own Kelvin Tan. So Kelvin is the venture lead for Nexus by Standard Chartered Bank. Nexus is our banking as a service platform, and we've been, supporting Nexus for a little bit over a year. Kelvin, many thanks for joining, and a warm welcome to this podcast session.
Thank you, Harold. Thank you, Simran. Glad to be here.
Our second guest for the podcast is David, who is a co-founder and CEO of Personalitics. Personalitics, for those who don't know, is a leading global provider of data-driven and personalized solutions for the financial services industry. They're currently serving over 100 million banking customers worldwide across 30 different markets. David, thanks for joining us today.
Nice to be here, all the way from Tel Aviv.
Thanks for joining us. And we have our third guest, Marnix. Marnix is our global head of partnership and retail banking at Standard Chartered Bank. Marnix, you have been with financial services for the past 15 years. You're launching for us a number of partnerships, new businesses, building online B2C, B2B products, and expanding sales for the bank. Warm welcome to you, and thanks for joining us, Marnix.
Thanks, Harold and Simran. Hi, everyone.
So let's start maybe with a question for Kelvin. So Kelvin, as you know, and as you're experiencing at SC Ventures, we're experiencing new business models, and obviously embedded finance is a huge area of interest for us. Can you tell us a little bit more about yourself and how you started your journey with Nexus?
Yeah, I mean, I've been with the bank a little bit now, just over 9 years at last count. So the journey really started with the problem statement of SCB, Standard Chartered, is a global bank. It's got many licenses. It's got many entities around the world. And we have a large retail presence in a few key markets: Hong Kong, Singapore, Taiwan, Pakistan are arguable. But we do have small retail businesses in a lot of the markets that we are dispersed in. And the problem statement for us here is, how do we gain scale without necessarily incurring the traditional costs of gaining scale? Building branches, getting RM, setting up new systems, creating new channels. So that was the problem statement I was trying to solve at the very beginning in 2017. And I came up with the idea to say, you know what? Why wouldn't we take the opportunity to rebuild a middle layer for the bank that is horizontally scalable, that runs products at a far faster rate that the existing systems can do, and then create the capability for the bank to scalably partner with large ecosystems and turn them into banks, as opposed to SCB being the front end of the entire experience. So therein lies the genesis for Nexus, right? Nexus solves multiple problems in this regard. It solves the problem of the bank from the scalability standpoint. It solves the problem for digital ecosystems for providing financial services without the heavy lifting of actually providing financial services. It solves the problem for the regulator because the bank remains at the back end and accountable for all regulatory requirements. And it solves the problem for end consumers because it creates a capability for hyper-contextualization as well as real-time data transfers. And that, in a nutshell, is how it came to be. I mean, it's been just over 3 years now. We've built a platform. We are in production. We have 2 partners announced, Bukalapak and Sosiola in Indonesia, and we're looking at multiple markets rollout in the next couple of years.
Thanks for this. And maybe for if we were to go back a little bit to, I remember having a conversation with you on the genesis of what embedded finance is. How, what came up with the need of embedded finance? I'd love to get your perspective, and then maybe, David, if you want to chime in at some point, that would be great as well. But yeah, why embedded finance? How did it all start?
No, so I mean, as we're building out Nexus, one of the key reasons, other than the key problem statement for the bank, was the fact that the global trends are pointing towards a seamless experience for end users and SMEs, both in terms of the ability to access their funds, to make transactions, and also to access credit. Now, that being the case, I mean, it wasn't called embedded finance back then, right? Embedded finance is a relatively new term, but that was the trend of Amazon providing a bank account via the Amazon platform, and multiple other players, Kakao Bank providing a banking as a service capability for Kakao Pay. So embedded finance, as we know it today, it's perhaps in its infancy, and the ability for the technological solutions and the way we execute embedded finance will keep evolving. And Nexus is probably the next step, and Nexus itself will keep evolving over time.
David, did you want to give your perspective on the genesis of embedded finance and what it means to you and the customers that you serve?
So I actually want to start by saying that I agree that the first and the kind of main theme is the integrated experience. I think consumers are looking for simplicity. I think consumers are looking for something that they can do from start to end, buying a product, financing it, paying for it, getting the insurance protection for it. And I think that drives a lot of the demand for embedded finance. I think that the second thing, which is kind of interesting, is fintechs. There's so many fintechs going on today. They don't have the banking capability. They don't have the regulatory structure. They don't have the risk structure. And so I think that actually creates an opportunity, if you think about it. Those fintechs that are trying to compete are basically looking for services that can help them. And I think that's another one that is pushing embedded finance up there. And I think that the third thing is open banking. I think the more open banking is starting to kind of hit adoption rates that will make people share their data, and that opens up the door for multiple business models in which an insurance provider can actually look at your bank statement and based on that offer you the right retirement program. A retail store can provide you finance based on understanding how much you owe in other places without doing too much, just linking into your bank account. So I think that there's a couple of things over here that are pushing the embedded finance kind of forward. I think that my kind of focus and my kind of special interest is the intelligence, is the personalization, is to really the embed part. Because in the past, you can also get a white label card from a retailer. Okay, so what's the big deal? You need to make it as smart as possible, as intelligent as possible for the customer. The amount of the loan that the retailer is going to provide him will be the right one based on his needs. And I think that if you do that, then embedded finance can really hit the promise. An embedded, seamless experience that solves the purchase and also the financing need in a single kind of view, single journey.
Great, thanks for that. Maybe back to Calvin. Obviously, you're building a new venture or a new capability, I would say, within Standard Chartered Bank. But how are you supporting, I would say, the growth and new revenue streams for the bank? And how did you get the bank to support you, I guess, on this entrepreneurial journey? And maybe I'd like to get Marnik's perspective on that as well. As how can we get to be part of that partnership ecosystem? Calvin?
I'll make two quick points in terms of alternative revenue models. The first of which, when I talk about scalability, obviously our partner in Indonesia and the partners that we will be signing on via Nexus in multiple countries will look like that, right? It's 100 million users, 15 million MSMEs. The balance sheet that we can generate with very, very minimal acquisition cost is extremely high. And that changes the way the traditional retail bank operations and cost structure work. That's the entire idea behind Nexus.
Yeah.
But we also, once that's established and set up, and Marnix and I have had a lot of intellectual discussions around this, we can then start charging fintechs for access to Nexus. So we will enter a partnership with large ecosystems for the balance sheet, and we can then create fee income in terms of charging fintechs the same way Starling has done in the UK with their banking as a service platform. It's a good thing Starling is a one country bank, whereas Standard Chartered is not. So those are my 2 cents. Marnix?
Yeah. No, I think, if you look at what we are doing at the moment within Standard Chartered Bank, I think we have banking as a service with Nexus as a leading platform proposition, going live in Indonesia, one of the largest markets from digital economy perspective. And like Kelvin said, we will roll that out fast to other markets, more products. So I think that's one. Then on the other hand, we have our digital banks like Mox, and now recently also announced in Singapore, which is another play. Then we have, of course, all the things ventures are doing, from investments, all the other propositions which we are launching. And we also have been modernizing our core banking stack, that we are open API, that we can actually talk to these platforms and there. So I think we have multiple pillars, what we do across Standard Chartered Retail Bank. And which I think in combination with, to Kelvin's point, in combination with our footprint, gives us a unique proposition to partners why they should work with us, because we are more active in more than 30 countries. We're quite aggressive from a growth ambition perspective. We are one of the few banks who I think wants to grow in mass retail, especially in Asia. So that combined makes it, I think, an interesting proposition. And that's why we were able to close some of these partnerships recently with very exciting opportunities. So yeah, and it doesn't make sense to bring all these customers to the bank. I mean, that's what embedded finance is about. So it doesn't make sense to pay Google $100, then onboard them, put them on our legacy systems. Why would we? So I think we have a lot of other business models now out there, which makes more sense if you want to scale and grow your base. So yeah, that's my 2 cents.
Great.
Tim, I think you wanted to know a little bit more about Personetics, right?
Yeah, no, exactly. And David, great to have you here again, and also would love to hear your entrepreneurial journey and really what compelled you to build and launch a venture like Personetics.
Well, I've been doing data science for financial services before it was called fintech. Initially in data warehousing, and then more recently in the compliance kind of world. As the CEO of a company by the name of Actimize, I built anti-money laundering system for most of the banks in the world. But frankly, how many years you can actually sell to legal and compliance? At some point, you start to think that you want to, try to do something different. And apologize, to all my colleagues from that team. And we took the original team from the compliance side, and we started to think about problems that we can solve with real-time data processing. So we started to look at customer service, where digital just started. Our first kind of use case was dispute. So we were thinking about, okay, someone comes to dispute, and we can see that the wife is actually, typically uses the card, and she's using it in this particular place. But now the husband maybe took the card, used it in another place. Is it typical or not? So it's not really fraud, it's actually customer service. Now, we then had to start to convince the banks that engagement is really important. Now you and I are saying, well, how is that possible? But 5 years ago, if you approach a bank and say, we want to make the customer aware of cash flow issues because they need to know that, the bank will say, no, but I'm actually charging fees for that. I don't want to let them know. I want to actually continue to collect the fees. So it was an interesting kind of journey for us to explain to the banks that engaging customers, helping them, protecting them, showing them that we actually are trying to guide them is something that they should really care about. But once the transformation started to hit at a large scale, our business really started to boom. And I also, what I'm seeing also over here is that banks are kind of taking further steps in terms of the use cases that they're actually implementing. So if initially it was more, informational, then we started to look at use cases where we can make an advice, an offer, which, some banks actually are, need to decide. Can an algorithm tell you if you need to save or if you need to pay off a credit card? That's a little bit more interesting. And then, even to take it further, right now we have several banking partners that are using our auto saving, auto invest capabilities. So we have banks right now that are allowing us to move up to $100 a day automatically based on cash flow, meaning the customer doesn't have to approve it, just one-time approval in the beginning of the service toward a saving or an investment goal. And the entire risk, the entire decisioning process is managed by the financial institution powered by Personetics. So we are definitely starting to see that personalization and data-driven is moving from data, visualization, insights, advice, and automation. And the more we start to embed it, what Kevin is doing within the journeys of non-banks, you will need to see more and more of that in order to really kind of streamline the process. And that's why we're so excited about this type of initiative.
Yeah, great. That sounds like there's a lot going on. And can you tell us a bit more about your key customer segments and how you provide data-driven solutions to these segments?
Yeah, so I think that our kind of number one segment still is our big banks. We call it protecting the dinosaur, because I think that for a bank to think about transformation, it's a big thing. And if you think about the options, changing the core is something that very few people, some do, but let's agree that it's not something that easy. And so what they're looking for wrappers. They're looking for things that they can put on top of the core that can power their digital channel that will start to change and behave more appropriately toward one customer versus the other. So our number one play is still helping banks transforming in months versus years, instead of changing everything, putting something in the middle that can really change the interaction on the existing channel. Our second segment, which also is quite interesting, is consumer finance and digital banks. Because of the open banking shift, a lot of consumer financing units that typically don't have high intensive customer interaction kind of thing are starting to look at it in a much different way. They'll say, well, why can't I offer lending direct to consumer instead of actually going for someone else? And so that is a market that is opening up. And the third thing that I will mention is that SMB is a market that in the last 2 years is actually picking up. This is, of course, a result of fintechs that are trying to now, take a bigger pie of payments, of lending. And so a lot of the effort right now is around how do we build solutions that are more geared toward the small business world. And I would say that the last thing I would mention, which we barely touch, but it's definitely something that I do see, is wealth management. If in the past, wealth management was all high touch, banker, the digital capability is mostly actually behind the retail. We are starting to see, even in Asia, some institutions taking kind of a step forward and saying, yes, we understand that there's a banker traditional thing going on, but let's talk about how to engage them also digitally in a whole different way. So yeah, a lot of things are happening right now.
And what is interesting and what all the three of you are saying is that one of the needs is that we're seeing is better customization, better customer service of our customers, faster treatment of the information based on data personalization, but also market access. And I'd love to hear a little bit more about, we recently announced our partnership with Atomi, and wanted to get maybe Marnik's sort of explanation of what is this going to provide to us, and some of the opportunities that we can get out of this new partnership that we recently signed.
Yeah. No, I think that is a very exciting deal and very appropriate example, I think, for embedded finance and how we can partner with one of the leading fintechs, in our region in Asia. I mean, they are the largest BNPL player in our region, and they're growing very fast. So why it is important is, I think, a couple of things. They have more than 5,000 brands. Access to a lot of leading brands in our region, and it's in both in-shop and online proposition. So they work with them in the online web shops, and they also are in the physical shops. So if you shop in Malaysia or Singapore, Hong Kong, you definitely have seen their yellow Atomi now in a lot of shops, and people are using it. So for us, it's really a great way to have access to all these millions of customers who use Atomi already today, and they will keep growing. So that's one. So, and secondly, they have the data and the AI capabilities and the scoring capabilities that they have been building up in the last 4 to 5 years. So they're also really good at managing risk. So that was the reason why we decided to sign a 10-year agreement with them. And what we will bring, we will give them funding so that they can grow and fund their lending business, the BNPL business. But more important, we are already also co-creating a lot of other products which we want to offer in their ecosystems. So we will offer them, think about, everyday banking solutions like wallet solutions and all kinds of other card lending propositions, which we will do. And then because they are quite comparable to our footprint, we will also launch this in 8 to 10 markets in the next few years. So we can also then copy from one market to another market and grow and do that. So that is the commercial deal of the partnership. And then the other part is that we also take an equity investment in the company. And so that we also have that strategic relationship with them, so that we also are one of their key investors. So yeah, let's see. I think this is one of the most exciting deals from this year, which we signed. And it's a long-term 10-year deal. So we are now focusing on launching and then growing the business. But I do think this is a really good example of how a leading fintech can work with a bank and leveraging each other's capabilities. And to both, we can benefit from each other. So yeah, that's the deal.
Yeah, no, great. And both Atomi and Nexus mark strategic investments in the bank's digital retail space. Marnix, what can you tell us about the bank's vision for growth in this segment going forward?
Yeah, so we announced last year that mass retail is one of it's actually our 4th key strategic pillar for the whole Standard Chartered Bank. So what we want to do is really grow our base. I mean, what Kelvin said, our base is relatively small in a lot of our retail bank markets, and we want to grow that base. And that's important for a couple of reasons. We want to bank customers earlier, that they start banking with Standard Chartered earlier. And secondly, a lot of these customers, we will grow with them. So we will start with lending, simple digital wealth products, everyday banking, but they will also grow to become affluent customers over time. So I think that is really important. Another part is our SME business banking side, which we also now are developing and also want to grow that part of the business. Think about merchants, SMEs, that's also a fast growing part where we want to play. So yeah, so mass retail is a crucial part of the bank strategy, and that's why we're doing all these different initiatives. But I think one of the most important outcomes, what we are looking for, is to double our base of customers in the next few years. I think that's the first step, and then offer also more products for these segments, which makes sense. Yeah.
I think, going back to Kelvin and I'd love to get your perspective on that, but I think one of the changes, radical changes, is the better information that we have through the data that we're capturing thanks to our different digital channels. How does that impact your business model? If you can discuss a little bit how that impacts your business model for Nexus, and also if that has any impact on the engagement model that Nexus has over time.
Oh, massively. So Marnix and I obviously talk quite a bit, and Nexus will become integral in supporting the expansion plans that Marnix has with regards to even Atomi and any other partnerships across the region. Now, how the use cases for the data integration, and we obviously built a large scalable data lake in as part of the Nexus build and integrated down to the reporting systems of the bank, is this. I'll give you the easy example, right? Bukalapak is in production. It's an e-commerce platform. Harold shops on Bukalapak, I'm sure, or Simran shops on one of the e-commerce platforms, and it's powered by Nexus. Harold says, I would like to open a Bukalapak bank account, right? So, which is what Nexus has provided via Standard Chartered to Bukalapak. Now, the moment you say yes to the T's and C's, essentially every single thing you've ever done on Bukalapak becomes accessible to SCB and Nexus to do an analysis on both onboarding, credit underwriting, as well as customer servicing. A good example would be your national ID details, your purchase behavior on Bukalapak will then be made available to us. And all your forms will be pre-filled with data that's already readily available that you've already done as you onboarded as part of Bukalapak. And therefore, the onboarding times that we are targeting for something like that is anywhere within the 2 to 5 minute region, depending on the country, depending on the regulatory requirements. But net, from the customer experience perspective, it is massively seamless. We then use, obviously, the usual OCR, facial recognition kind of technology to validate identity against a national database, which means that there's no reason for the customer to come physically for face-to-face verification and or for a callback via WhatsApp, phone, or some other phone mechanism where you have to wait 2 to 3 hours for that to happen, and you have to hire an army of people to do callbacks. So just that use case alone, just the onboarding alone will lead to a conversation around a 2 to 3 minute discussion from end to end of the customer saying yes to opening an account to the customer being onboarded with a fully opened account and start transacting on that account. That's one use case. There are thousands upon thousands of use cases, as David would probably talk about, with an integrated data lake and the right AI/ML capabilities to run multiple hyper-contextualized capabilities for the bank. I'll stop there.
Yeah, maybe just an additional question around that trend, which is, so you're mentioning that Nexus data lake. Is this a data lake that is going to sit across your different customers? Imagine Harold or Simran wants to open a bank account with one of your customers. Would the process be faster if he wants to open a bank account with another one of your customers that's also on the Nexus platform, or what are your plans around there?
Yes, it is meant to be universal, and it's meant to ensure that we minimize time to market and onboarding the customer and servicing the customer. However, the data lake has also tight security requirements. Clearly, we are a bank, and we cannot afford to be loose with any kind of security requirements. And the partners or customers in your parlance don't have access to the data across. Only the bank has it across multiple partners, and only the bank can see and use the data for any kind of assessments. And therefore, yes, the short answer to your question is yes. It will allow for us to have massive use cases across multiple partners. Harold, however, will not know, or at least unless you read the T's and C's well or look very closely into the terms, will not know that opening an account on Bukalapak and then opening an account on our second partner, Sociola, and you'll be like, hey, the experience is much better on the second time round. You would not know it's because you have already entered your details in Bukalapak. Because the affiliation is with the partners. Yeah.
Very, very interesting. One more question. I think Simran wants to ask you on your competitors, the trends that you're seeing, etc. But maybe a question on the way that you're building your platform and the architecture. Are you integrating with other partners, or are you building everything from scratch? Such as for example, you talked about KYC, you talked about AML. What's your current build stack like?
I think it would be silly to try to build the whole thing by yourself. There are parts and portions that people can do far better than we can. So most of the core stack is built. Some of it via open source, some of it via other licensees. But we do have vendors, obviously. Our facial recognition technology is a vendor. We have to ping a national database, which is through a vendor. We have a workflow engine that's also through a vendor. So it is a hybrid approach to ensure biggest bang for buck. And we invest money in vendors, in licensing fees and cost, where absolutely necessary, where we don't see the value of trying to build something from scratch ourselves.
Yeah, and Kelvin, while we're on the topic, just from your own experiences, what are the trends you're seeing in embedded finances, and perhaps an insight into where you see some of the opportunities and maybe challenges as well, particularly when we look at Asia as a region?
Globally, embedded finance is taking off at different speeds everywhere. In the US, there are plenty of banking as a service providers, either small commercial regional banks or via the platforms such as Synapse. In Europe, open banking has obviously created a different kind of environment with regards to embedded finance. And I would argue the right open banking regulations with the right kind of security protocols and platform layers will create a far better experience in the long run, which I think Asia and in most of the other markets, Bahrain, for example, just opened up an open banking regime. So that could be very interesting. In Europe, there's also big trends, right? Big players have started getting massively funded. Vodeno just got funded by Warburg Pincus, up to about to the tune of $400 million, pounds, sorry, 400 million pounds, and God knows what their valuation is. But the point is that it is becoming really big. In Asia, the conversation is far less intense. From a bank's perspective, I would argue that Nexus is probably one of the only attempts at the kind of extent of embedded finance that we're talking about. The other ones that I mentioned is Kakao, WeBank, and to some extent have done the same, but in Korea and China. And those are, I believe, the granddaddies of embedded finance, right? You can barely take a loan for any car in China without having to access a WeBank account, but you might not know it because it's deeply embedded in the T's and C's. So there's plenty of activities, but I believe we are still in our infancy. In Southeast Asia particularly, I think we are going to be pretty much first to market on this.
Well, it shows the potential of the Nexus solution, and wishing you, all the best for your valuation. When you just spoke about that comparison, really interesting. Maybe going back to the data part that you mentioned, and also what you were mentioning, Calvin, which is there's no point of building everything when there's already off-the-shelf solutions, and with today's API connectivity, it might make sense just to partner with existing solutions. So question back to David. How do you work with other partners, and how much is data sharing acceptable? How do you ensure data privacy versus improving the experience of the end user, et cetera? So I'd love to get a little bit your perspective on that.
Yeah, I think that first of all, some regions, the regulation is dictating a lot of the kind of the to-dos. The GDPR in Europe is extremely strict, and so when we follow that, there's a lot of things that we can do, but a lot of things that we can't do or must do. In our client base in the European region, some of them are actually implementing a policy that even generating insights require kind of customer consent. The data is going to be used, even if it's for the sake of just providing assistance. Where they're in countries like the US, there's more flexibility. The idea of offering you something is still something that many of them will do with our platform without collecting customer consent. I think that data sharing has improved quite a bit, and I think that what Kelvin point, the open banking does provide you with a lot of flexibility and also reliability. If you think about the old world of screen scraping, sometimes it works, sometimes it doesn't. A standardized API gives us the ability to rely on the fact that we will have data, and we can do the evaluation relatively fast. I would caution and say that you have to still look at the adoption rates. I think that, having said all of that, and still look at the adoption rate of open banking in the UK, the mecca of open banking, it is growing, but it is not yet at the level that you can say, I can build something that every customer will have. And I think it is a consequence of the use case. In the beginning, people thought, okay, we'll share data and everyone will come, but they didn't, because there wasn't enough justification for the customer to share the data. That action, those T's and C's, as Kevin mentioned, that thing that you press on a button and someone actually grabs the data, is still something. Forget regulation, forget technology. It's in the mindset of the customer. And I think that when we look at how we build our technology, we always think about, okay, the open banking is there, we can grab it, we can use it, but how do we make sure that we have enough people providing us that access? And we have to build strategies that will say, what happens if they don't? So I think that it's a combination of, first of all, what regulation is allowing you to do. I also think it's the maturity level of how solid are the APIs, can they really give you the quality that you need? And I think that the third thing is really, how do you build use cases that give you double digit versus actually single digit? Because again, in the end of the day, that action of people sharing things is not easy for many people to kind of agree to. And I think that it's something that everyone needs to think about when they are kind of contemplating using these type of services in their product.
So to your point, it's not so much a technology issue more than a regulated and business discussion, I guess, between the different stakeholders?
Well, I would say the number of times that I see amazing kind of flows, you know, they look great, they do amazing things, but I look at it and say, but why would the customer do that? Like, you know, it's shocking how many times I see that. I think that I still believe that even today, one of the key obstacles is to actually make the customer kind of start the process. So what's the value? You know, are you going to give him better rates? Are you going to actually match him with the perfect kind of insurance policy? Are you going to actually open the account and give him, you know, rates that he can't get anywhere? Is it going to be something that he can do in 2 seconds instead of 4? I think that all of these things are key in order to guarantee the success. And as I said, the number of times that I've seen banks or fintechs launching standalone tools where the starting point is connect and then we'll do something is a lot. I see it quite a lot, still do. And in my mind, most of them will fail because they don't think about the customer from a customer point of view.
David, we understand that Personetics, through its different products, is helping financial institutions deliver personalized solutions to their customers. I guess, sort of a balancing act, how do you tackle the issue of data privacy when you're offering such advanced personalized solutions? I guess it's something that's likely to be on your mind and something that you've got to balance with your customers and your revenues and how you operate. So how do you solve for such a tricky topic?
Yeah, it's a great question. So the first thing I would say is that we do not use PII, and actually when we sign up a contract and we set up a system, we actually say very clearly, do not give us PII because we will not take it. We know already that once you take the level 1 PII data, the level of scrutiny is going to be tremendous. And so we are very cautious. Actually, we're very persistent in guiding the data science team and everything that we do not to use the specific fields that contain, you know, the account number, the age, and all of that stuff, but really focus on the financial transactions to drive the patterns. Having said that, you know, there are some cases where even that we consider to be, you know, private and secured. So I think that what we're doing 2 other things. The first one is that we are investing heavily in security, and the way we're looking at our SaaS offering, we are standardizing with one provider. I think that in the beginning, you know, people thought about, okay, we can do this, we can do that. But once you stabilize yourself on a platform, you can invest heavily to really try to kind of make it robust. And I think that there's a lot of, you know, good providers out there and really a good kind of stack you can use. The third thing I would say, which is a little bit controversial, you know, versus what other fintechs will do, we also provide private cloud or even on-prem solutions still, because we know that in many cases there is actually a big obstacle launching things outside, especially if you're the first one. So when I go and meet a bank and they tell me, hey, we want to go and we want to put SaaS and send the data, and I'm asking them, have you done it before? And they tell me, no, I know I'm in trouble. I know that that process is going to be a big one. And so we have to provide them the options. We have to tell them, okay, you know, let's build the use case first of all in your private cloud. Let's prove it. Let's take it out. And so our technology is designed to operate on-prem. It's designed to operate on private cloud. It is designed to operate in SaaS. As I said, we're standardizing on a single SaaS platform, so we don't have any kind of you know, room for error. And the most important thing, we do not accept a PII into the model, so no one will even bother thinking about, hey, is it really there or not, or what happens, God forbid, you know, something bad will happen.
Great. Well, thanks for sharing your perspective on that. We're running a little bit out of time, but I wanted to address a few questions that we received from the audience, and these questions are actually really for all 3 of you. So the first question is maybe for Marnix and also for Kelvin. But Marnix, from the bank perspective, and then Nexus, Kelvin, from Nexus perspective, when you pitch, I'd love to get your perspective on that. But why is embracing embedded finance a must for banks? Maybe Marnix, what's your answer for that question we received?
No, I mean, I think it's a must because otherwise we cannot reach a lot of people if we, like I said, have to bring them all to the bank. So we can reach new segments, new customers. I think one of the things, we discussed a lot in the last couple of days about all the new technologies and what's happening, but we also have still 1.7 billion people which are unbanked. And we need technology to solve this problem. We need to be in these ecosystems going after new segments. So if we don't embed financial products deeply, we cannot reach these segments. So I think that is a key reason why we are doing this and embedding our products into these ecosystems.
Yeah, I absolutely agree, Marnix. And my only addition to that is this also goes hand in hand with the way people will consume financial products in the next generation. We can't be thinking about the last 5, 10, 15, 20 years. We need to think about the next 5, 10, 15, 20 years. And therefore, if you believe that at some point people will start consuming financial products only within the contextual ecosystem that they operate in, and that's increasingly going to change, right? With Facebook and the whole metaverse discussion, who knows whether or not that will come true, but that certainly will be a precursor for more builds of more ecosystems and how you actually operate and buy, sell, and consume products. So this is, I believe, a baby step in the right direction to create that capability, because if you don't have that capability when the time comes, then good luck.
And Kelvin, while you're on the screen, there's another question that's come in for you. What can partners expect if they wish to work with Nexus?
And maybe if David tomorrow wants to work with Nexus, which would be a possibility. So what could David do if he wanted to work with Nexus?
Well, the basic pitch for us to partners is really this, right? We create the ability for you to become a bank without any of the heavy lifting of becoming a bank. Now, what is the advantage of becoming a bank? As long as you don't have to deal with the cost and the regulatory requirements and the reporting, it creates a use case for stickier ecosystems, right? Customers use you more. Customers then start being reliant on you with regards to financial information. And your access to that capability becomes a significant barrier to entry for other competitors. So for our pitches to the partners have always been, yeah, it creates a stickier ecosystem. It creates more use cases. It creates more monetization opportunities for our partners, and therefore there is a significant amount of interest in this.
And yeah, if let's say API integrators would be interested in working with you, what's the right way for them to approach you and work together?
Oh, it's easy. We have I think asknexus@sc.com where everything gets channeled to our partnerships and or our marketing teams, and then it'll be filtered to the right places. Yeah, so happy to do that, and or I guess they could email you, Harold and Simran, and you can channel it to the right places as well.
Well, that's always a possibility. Well, thanks a lot. I think this has been a really informative session, and obviously this is a topic we could go on for a long time. It's such an interesting and new area that we'll keep on discussing about it and the future Singapore FinTech festivals and more. Maybe what I could do is we receive more questions, but again, we've run out of time. What I'll do is I'll reach out, if that's okay, to the three of you, and maybe we can continue the conversation on our different platforms. Obviously, you can find us on the SC Ventures FinTech Bridge, but also on our LinkedIn page, where we already have a number of great articles on DeFi, sustainability, blockchain, and a number of other topics. So feel free to engage with us over there. I want to thank you, Simran, for co-hosting this session with me. And a big thank you to the three of you, Kelvin, David, and Marnix, for joining us today. Thank you very much.
Thank you, guys. Thank you to the audience as well.
Thanks,
Bye.
guys.
Thanks, everyone.
Pleasure.
Bye-bye.